Friday night saw the release of disappointing US job numbers, but it was a case of bad news is good news as far as equity markets are concerned. Both the S&P 500 and the Nasdaq closed higher as just 261,000 new jobs were added in the month of April. This was far below market expectations and resulted in an increase in the unemployment rate from 5.8% to 6.1%. So why the rally in stocks? Well, higher unemployment makes it less likely that the Federal Reserve will be raising interest rates anytime soon. The value of any asset is simply the sum of all of its future cash flows divided by an interest rate. If interest rates are lower, then valuations are higher, so stocks went up. Curiously, the total number of employed workers in the United States remains about 8 million short of the pre-pandemic highs. Here in Australia, the story is different. The total number of employed workers in Australia is now at an all-time high, which has again stoked debate about how long the RBA will keep interest rates at all-time lows, and whether or not the RBA might begin to reduce the scale of its bond buying program. The relative outperformance of the Aussie economy has helped to boost the Australian dollar, and we are now seeing it not far from the highest level since March 2018. International grain prices have also extended gains late last week. Professional money managers have been increasing their exposure to grain markets as dryness in the United States and South America imposes supply constraints on the market. Low forecast corn yields has also helped wheat futures to rally as traders price in the likelihood of more wheat needing to be diverted to feed to make up for the shortfall in corn. The US dollar also helped grain prices to leg higher. The greenback was weaker following the release of those soft job numbers, and since global wheat prices are denominated in US dollars, a weaker dollar means higher grain prices. Over the weekend, the UK held elections for regional parliaments and local councils. Boris Johnson's ruling Conservative Party recorded strong results, including the capture of the seat of Hartlepool in the north of England, which had been held by the Labour Party since its creation in 1974. It wasn't all rosy news for the Prime Minister though, as the Scottish National Party came within one seat of an outright majority in the Scottish Parliament and immediately resumed pressuring Westminster for another independence vote. The markets didn't seem to mind though. We saw solid gains for sterling on Friday evening and again on Monday morning as traders reacted positively to Johnson's strengthened mandate. And that's finance.
Thanks, Ben.